Hey, what's up guys? John here. We're seeing a massive change in the residential real estate space. We're seeing home builders shift direction entirely. Now, over the last 2 years, we've seen a very interesting ride for home builders. In 2020, they've really taken advantage of the low interest rates. People are leaving expensive cities such as New York and Los Angeles and moving to a place that offered a lifestyle maybe that's a little bit more in line with what they believed in, or possibly an affordable place, or no income tax, one or the other, or possibly all three. People are leaving big cities and chasing change. And that's ultimately what many Americans secured, was that change. But then we've stepped into this new paradigm shift, which is where the change has been fulfilled, but now interest rates are increasing. There's more uncertainty. Supply chain issues are continuing to progressively get worse. Labor costs are going through the roof. All the while, mortgage rates are continuing to increase, meaning it's costing buyers more money to really qualify for that mortgage to buy that property. And they're seeing, I can get a lot less house today than I could have 6 months ago. Maybe it's best to hold back. I'm looking at the stock market, looking at the crypto market, looking at the economy. Things look pretty shaky, and I don't want to get caught buying at all-time highs, so I'm going to pull back. And so home builders are seeing that there's a big pullback in the real estate space, the residential space. So many of them are doing one of two things. A big builder like Lennar, which we've all heard of, they build about 53,000 residential properties per year. 53,000, that's substantial. Now they're shifting, and Lennar makes a big bet on single family rentals, and they're launching a $4 billion fund, a platform to seize pandemic fueled need for space. One of the country's largest home builders is making a giant bet on single-family rentals. Lennar is launching a $4 billion platform that will buy single-family homes and townhouses to turn into rentals. Called Upward America Venture, will target high-growth markets, the company announced. Miami-based Lennar said the venture will initially be capitalized with $1.25 billion in cash in equity commitment, led by Centerbridge Partners and Alliance Real Estate. CEO Rick Berwitt said a portion of the properties will have a rent-to-own option, which will give tenants the opportunity to buy without having to fork over substantial down payments. It could do that, but ultimately, people that are moving in there with the intent to buy, if interest rates continue to go up, it's going to get more and more likely that they don't buy inside of that community. Instead, maybe they leave that community and buy a property that's a little bit more distressed, especially if they are leasing the property with the option to buy. They're most likely going to have that option to buy at a higher price than the market will determine in a year, 2 years, 3 years, and onward. The pandemic has led to a surge in interest in single-family home rentals. Some city dwellers unable to buy but searching for more space than an upward apartment can offer and moved into rental homes in the suburbs. We've heard this, like Bloomberg, a lot of these publications have put out articles saying that, America should be a renter nation, and seeing a lot more people moving into apartments. And we're seeing these builders moving into this direction. Now the home builder confidence drops for a fourth time in 4 months as inflation hits materials. Builders in the single-family housing market are facing growing expenses, which is causing a turnaround in sentiment to start the year. Builder confidence fell 1 point to 83 in January, according to the National Association of Home Builders. Wells Fargo Housing Market Index, anything above 50 is considered positive, but that's the first drop in 4 months. The index also stood at 83 in 2021. Higher material costs and lack of availability are adding weeks to typical single-family construction times. The NAHB chairman Chuck Folk, a home builder from Tampa, Florida, his analysis indicates that the aggregate cost of residential construction materials are increased almost 19%. Almost 19% since December of 2020. That is absurd. The price of softwood lumber alone has jumped 85% in just the last 3 months, according to Random Lengths. Lumber prices spiked last spring and then came down dramatically over the summer. Then they're up again now after the U.S. doubled tariffs on Canadian lumber and western wildfires disrupted lumber production. Prices for other materials such as gypsum and steel are also higher, and the ongoing labor shortage has pushed cost up as well. Off the index, three components: current sales conditions was unchanged at 90. Sales expectations next 6 months fell 2 points. to 83, and buyer traffic fell 2 points to 69. Builders are also facing a much higher mortgage rates in the new year, but the HMI data was collected early this month and doesn't fully reflect the jump. The average rate on a 30-year fixed rate mortgage is up 50 basis points higher than it was a month ago and 83 points higher than it was 1 year ago. We have a rate hike coming in 3 more weeks. At least that's the schedule for Jerome Powell. While lean existing home inventory and solid buyer demand are supporting the need for new construction, the combination of ongoing increases for building materials, worsening skilled labor shortages, and high mortgage rates point to declines in housing affordability in 2022. Now, I believe we're going to start to see two things happen to these home builders. One is we're going to see a lot of unfinished tracts all over America where, they maybe are 5 or 10 or 15 minutes out from town building homes for $250,000, $300,000, $400,000, thinking that they're going to be an affordable provider. People in these expensive communities are going to commute there to save money, but now they're paying way more than they anticipated to actually build this property, and buyers are pulling back, and their costs are going up, and they're having trouble securing labor. We're going to start to see all these unfinished tracts. I think that we're going to see private equity funds and investment pools of capital run it there, buy those unfinished tracts, finish them, turn them to rent to own. I think that's going to be a really, really big pivot that's going to happen. And then also I think that the developers that are doing very, very well right now, they're going to start to shift to more of a lease to own option because it's going to give them two great options. The first is going to allow them to hold onto the asset, and then two, it's going to give them pricing power. As interest rates continue to increase, more people are going to be forced to rent, which is going to give them the availability and the option to continue to increase rents, which I think is ultimately what a lot of these investment funds and what these investment companies and vehicles are going to be doing. What do you think about this entire situation? Where do you see the real estate market going? And what do you see happening to home builders in 2022 and 2023? Drop below and hit the like button. Hit the like button. YouTube is going to share this content to educate more people about what's really going on. Also, subscribe to my second channel. It's going to be a podcast and an interactive show starting next week. It's going to be really cool. People are going to be able to call in, and it's going to be live calls. It's going to be really awesome. And then also Twitter, TikTok, LinkedIn, Instagram. Everything's in the banner. I'll catch you guys later.